So thank you everybody for joining us today. We're going to kick it off here in about 30 seconds. We're just dialing in, testing audio. Appreciate everyone's time today. We're happy to be speaking about opportunity zones post-COVID-19, and we believe they're more important than ever. We're going to hear from everyone else on what they believe. Today we're going to hear from leaders around policy, tax and structuring, real estate, and investments. So we're pretty excited to bring you this panel. A lot of work. Really want to thank the panelists for taking the time, and also Senator Scott's team, Brandon, Molly, and Emily, for working with us over the last 8 weeks to put this together. Obviously, we have a lot of distractions these days, a lot going on around the world and domestically, and so we're really excited to have this conversation and just share insights with everybody on the call today. So without further ado, I'll introduce the speakers. We have Kunal Merchant, President and co-founder of RevOZ. We have Shay Hawkins, President and co-founder of the Opportunity Funds Association. Shay, thanks for joining us. Rob Irwin, CPA, principal at CLA accounting firm. And of course, Alex Bethal. He is the managing partner and co-founder of RevOZ Capital. I'm Kevin Maloney. Again, welcome for everybody just dialing in right now. And RevOZ Capital is a real estate private equity firm that focuses on providing capital to sponsors and developers for the purpose of new acquisitions, developments, and recapitalizations within designated qualified opportunity zones. This is throughout the U.S. Obviously, there's 8,700 zones. We'll learn more about that. One thing I want to point out, I'm happy to report that last year we were recognized with the Opportunity Zone Investor of the Year Award from Wall Street. Also joining us is Senator Tim Scott. He's our featured speaker. He'll be up in just a moment. We're waiting for the senator to just return from a quick vote, and then we'll kick it off. I will hand it over to, just while the senator's about to join us again, I'll talk about the agenda. And the agenda is going to be fast-paced. I'm going to hand it over to Alex Bethal in a moment. Alex is going to talk a little bit about RevOZ Capital and his inspiration for getting involved with opportunity zones. We're going to hear from the senator. Senator Scott will set the stage with some remarks on opportunity zones. And we're going to open it up to questions. We'll take questions from the expert panelists to start. And we'll take some questions from the audience, pending time. With Senator Scott, he has a hard stop at 12 o'clock. And then the panelists have all agreed to stay on for a few minutes after Senator Scott leaves the call to take additional questions from the participants. So if you are participating in the call, write down your question. You can send it on through the Zoom. There's a Q&A button. Right now we have about 275 people on the call. There are several more joining. So if you're just joining us, we're happy to have you with the RevOZ Capital Opportunity Zone webinar conversation happening today with Senator Tim Scott as our featured speaker. And again, we have thought leaders on the panel regarding policy, tax and structuring, and real estate investing. Alex, I'll hand it over to you to kick it off on RevOZ Capital, and then you can introduce the senator when he's ready.
Great. Thanks, Kevin. And thanks, Shay, Kunal, and Ben for joining us today. We're looking forward to a lively discussion with the senator. And thank you for everybody who dialed in today to spend a little part of their day learning about opportunity zones post-COVID. I remember well when I first heard about opportunity zones and the program. I received a memo back in February of 2018 sent by my business partner and RevOZ co-founder Ryan Parkin that described the program. Not a lot of people were talking about it at the time. It was just a few months after the law was passed as part of the 2017 Tax Reform Act. At first, I was a little dismissive, thinking it was just some sort of real estate tax break. But the more I investigated, the more I realized that this program had the power to change our country in a very positive way. The way that it does that is it incentivizes capital that already is in the billions of dollars to invest in areas of the country, or particularly urban areas that have been historically overlooked. What I like about it is it's a combination of good public policy that combines that's combined with market mechanisms to provide positive social impact, the potential for attractive returns, along with those tax advantages for investors. It's been of particular focus and interest for me, given the investments that our family made as part of the Sacramento Kings ownership group. Through that experience, we invested, the Kings ownership group invested in a development project in the downtown core there that resulted in $1 billion redevelopment of the downtown, tremendous job growth, and a revitalization of the area. That inspired me further to find out more about the Opportunity Zone program and how it could take the lessons we learned through that experience and apply it to other places around the country. So down the rabbit hole I went. We formed RevOZ earlier in 2018. At first, we engaged on the policy side as the 5 pages of law were really not an executable program. So we engaged with policymakers to learn how this was going to work. And then as the rules were set, we started investing. So we started investing early part of last year. We built a team around this dedicated strategy around opportunity zones and compiled a world-class group of advisors to help us implement our strategy of investing in primary and secondary markets in urban core. We're now in our 3rd fund vehicle. We invested in Senator Scott's home state of South Carolina on a project with Woodfield Development and Argosy, where we were taking an empty lot that was used for outdoor signage and are converting that into 380 multifamily units. So that project is, I think, a good example. We're providing hundreds of construction jobs. The project's already broken ground, and it will provide housing options for a growing part of the city. And that's one example. One particular project in South Carolina. There's hundreds of these projects going around the country, and there's the potential for thousands more. And we believe that in light of the civil unrest that's taking place today, the economic damage caused by the quarantine, that it's more clear than ever that this program has real potential to help our country. And also that it's more clear than ever that it's time to invest in ourselves as a country and build things and invest in our own cities and invest in our own people who have been overlooked for too long. So we believe that this can be a real part of the solution to bring this country together, to improve our country, to deliver financial results. And we have Senator Scott to thank for that. He's been the champion for this program. Senator Scott grew up in a single parent household in North Charleston, South Carolina. Although he was poor, he had a mother who worked really hard and a mentor who taught him the value of hard work and dedication. He graduated from Charleston Southern University, built a small business, and was inspired for public service. That journey led him to the Senate in 2013, where he's become a national leader on efforts to bring opportunity to every American family. The signature legislation has been creating opportunity zones, which was passed in 2017. We couldn't be more thrilled to have him join us today. Thank you, Senator Scott, for your leadership, for all that you've done to help American families, and all that you are going to do to help us through this crisis and make the Opportunity Zone program even more beneficial for America. So without further ado, I'm really thrilled to introduce Senator Tim Scott.
Well, thank you so much, Alex. It's good to be with you all here. I see Shay in the background there. I hope Shay's doing fantastic. Good to see your face. Congratulations on your primary victory there. I will say that Opportunity Zones is probably the topic from a legislative standpoint that I love talking about the most. Having a chance to make a difference in the communities where I grew up is a blessing from the good Lord. And frankly, to see the type of opportunities manifesting within the zones right now, it's been cool. Thinking about the pandemic and moving forward raises a lot of questions. I look forward to those questions. But again, thank you all for giving me an opportunity to talk about my favorite legislative issue, Opportunity Zones.
Thank you, Senator, for your time. It's great to see you. I heard you like to don fancy socks, so I don't know what socks you have on today, but
I've got some Thomas Pink, hot pink socks on. I'd put my foot up there, but there sounds like that would just be inappropriate. It would be fun.
Next time for sure. So I know your time is limited today, and we want to make use of that time wisely, and we'd like to open it up for, I think we'll kick it off here, and we'll open it up to questions from the panelists first.
Sounds good.
And we'll kick it off. If the panelists could address the senator with their question and give a 15-second background on their firm and their focus, that would be great. Kunal, if you wouldn't mind, could you kick it off? Kunal Merchant.
Sure. So then thank you, Kevin. Thank you, Alex. Thanks everybody for joining in. I know how busy things are now. Senator, my name is Kunal Merchant. I'm the president and co-founder of RevOZ, which is a trade group out in California trying to make opportunity zones work out here. And my question has to do kind of around this reporting issue. So the president and other opportunity zone proponents have spoken publicly about how there are already jobs and investments pouring into previously neglected neighborhoods. However, the skeptics of opportunity zones question those claims, given that one, the program's in very early stages, and two, there are limited reporting requirements on OZ fund activity placed by Congress and the administration, and that impairs the public's ability to verify impact. So as a chief architect and advocate for opportunity zones, how do you respond to those concerns?
Well, Kunal, thank you for the question. I would say to those who are opponents of the opportunity zones, if they were more cooperative from a legislative standpoint, we'd have reporting requirements today. We've had legislation to do it, and they have not been supportive of it because they may just be concerned about what will actually be calculated and understood from the opportunity zone legislation if, in fact, we had reporting requirements. I've asked for workarounds. IRS, of course, has presented a form that gives us the baby steps towards reporting requirements, but I'm 100% committed to getting reporting requirements done. I'm hopeful to find some friends on the other side who may be skeptics of the opportunity zone legislation. I'd love for them to work with me to get reporting requirements done. That should be a simple, digestible tool that could be used if we had the opportunity to get it done.
Thank you, Senator. Shay Hawkins, would you mind going next? Tell us a little bit about yourself and your focus, your firm. Your question for the senator.
Sure. So my name is Shay Hawkins. I am a former tax counsel for Senator Scott. And I run the Opportunity Funds Association, which includes developers, investors, entrepreneurs, and fund managers. And we exist to expand, extend, and ultimately add reporting requirements to the opportunity zone provision. And so, we really exist to make sure that this policy works and that all the hard work that Senator Scott put towards forming this policy actually bears fruit in getting capital into distressed neighborhoods across the country. So, Senator Scott, my question, coming into before the March 13th state of emergency was declared, opportunity zones had hit an important milestone in raising $10 billion into opportunity funds. And so, an important milestone there. And, now that we've seen this pandemic hit, we've seen, anecdotally at least, somewhat of a pause in opportunity zone investing activity, particularly on the real estate side. And so 2 questions. One, were you satisfied with that pace of opportunity zone investing up until March 13th? So in other words, 10 billion in a year and a half, do you think that was sufficient, according to what you wanted to see out of the policy? And then 2, what's the most important factor in getting opportunity zone investing ramped back up as we come out of the pandemic on the other side?
Yeah, so the pace of the pace of investments is a really important question because that's how you put meat on the bones. That's how you are able to to measure the progress being made in reasonable time. I think $10 billion with as much confusion as there was in the slow start from Treasury and IRS, I think the $10 billion is an appropriate level. The good news is, talking to the White House and the Council on Economic Advisors, they have suggested that right now there's about $75 billion committed for opportunity funds, which is good news from my perspective. As it relates to how we move forward, I think if you look at it as I have, that one of the reasons why I sent the letter to the Treasury was to address some of the issues that I think are really important to make sure the opportunity zones is that flagship legislation for a generation of people living in poverty and in distressed communities looking for their potential to be realized. So from my perspective, relaxing some of the requirements from a timeline would be very helpful for us to get to where we need to go. And I am still confident, as the folks who have come along after you, Emily and others who are really brilliant people on our team, are in constant contact with the Treasury Department, nudging them in the right direction. I think we're going to hear good news before the end of June, but I am looking forward to getting that hopefully sooner than later. But probably by the end of June, we'll have some clear guidance and hopefully a better environment, a more relaxed environment from the timeline perspective for investments.
Excellent. Thanks, Senator.
Yes, sir. Good seeing you again.
Okay, next up, Ben, would you mind giving us your background? Ben Darwin from CLA.
Happy to do so. Just really appreciate this opportunity to be part of this panel, and just want to say how much we appreciate you, Senator Scott, in terms of all of the effort that's gone into this program. I'm a tax principal with Clifton Larsenal, and we're the 8th largest accounting firm in the U.S. We like to say we serve Main Street. Our clients range from individual taxpayers to families and owners of business. And so this program has been one that has been significant for our clients. It's created opportunities for them to make investment, expand their businesses, and to make a big impact in the community, which aligns with our purpose, which is to create opportunities for our people and our communities. I focus in the real estate area. So I'm interested, obviously, on the tax side of the program, and I work with clients in helping them with structuring. So you touched on it briefly, but I specifically wanted to ask you to reflect on your May 4th letter to Treasury and the IRS. As someone who practices in the tax area a lot, I'm interested in the details, and your letter was filled with a number of very specific and helpful requests that we think are important to help in terms of helping investors and opportunity zone projects buy some very much needed time to be able to figure out how they can continue to move forward with their projects in light of the dip that our economy is experiencing. And I'm just curious if you've had any response, formal or informal, with respect to the relief in your letter.
Well, thank you very much. When I talked about the relaxing of the timeline, what I was really specifically talking about is that extending the window 2 years would be very, very helpful. We have had a lot of informal discussions with Treasury. I've mentioned it at the White House on 3 occasions in the last 3 weeks. Every time I go there, they start shaking their head because they know exactly what I'm going to say next, which has to do with the importance of making sure that opportunity zones is one of the major victories that our president has in helping to stabilize distressed communities throughout this country. I've heard very positive feedback. They have taken a look at the items, the list, almost a long list of items on the May 4th letter, and they are receptive. I don't believe we'll get them all, but I think we'll get a number of them. And I look forward to that. My thought was, as we were discussing with them the topics in May, that they were hopeful that the first week of June or the last week of May, they would have something coming out that would be public. That, of course, in my opinion, I've said this several times, whenever the government tells you it'll be next week, add 3 weeks to it and you probably won't be disappointed. So that's one of the reasons why I'm shooting for a June 30th timeline for the request to be made public.
Thank you, Ben. Thank you, Senator. Alex, did you have a question for the Senator?
Great. Thank you, Senator Scott. Alex Bethal from RevOZ Capital. We are a dedicated Opportunity Zone investment platform. The topic of today's discussion is a question as to whether or not investing in Opportunity Zones is more important than ever. Assuming you think it is, tell us why.
Well, there are so many reasons to say that opportunity zones are really important. Perhaps the first one is my own life story, the fact that being born in poverty, raised in a single parent household, understanding that in my neighborhoods, there's so much potential. There were lots of folks who had great ideas, the enthusiasm, the energy, and the work ethic, but it seemed like opportunity was so elusive. And part of the glue of America is keeping the American dream alive and well, no matter where you live. So from my perspective, one of the best tools, there's no panacea or silver bullet, but one of the best tools, one of the best arrows in the quiver is the Opportunity Zone legislation. It does several things for kids that I used to be. Number one, it tells you that there is a reason to harness your potential for a brighter, better future. Number two, it says to the parents that perhaps there's a way to bring more of the industry, more of the jobs into your communities. And number three, it says to the investor that there's a reason why we never leave any single area of America behind, and we give that additional incentive of being able to invest in these opportunity zones and get a healthy return. And frankly, the incentives of deferring the capital gains tax, reducing the capital gains tax, and the elimination of the capital gains tax are three very powerful tools. And frankly, as I think about Memphis, Tennessee, and the potential $1 billion project there, or in Rock Hill, South Carolina, with a $500 million project over the next 4 years or 5 years, according to the Mayor Geddes in Rock Hill, or the $75 million project in Greenville, South Carolina, building a mixed income area for the development of opportunity zones, and frankly for the development of potential, or the tech corridor in Charleston, or in South Dallas, a $400 million project that we're hoping will get its legs under it. Again, talking to some of the developers over there, they were hoping to create 2,000 permanent jobs. South of Chicago, a similar place where you could have affordable housing. What we're seeing is that the Opportunity Zone tool can be used in so many ways. And frankly, as we, I guess, emerge out of the global pandemic and hopefully out of riots as well, the one thing that we can expect is we're going to need an incentive-based economy for a strong recovery. Opportunity Zones really is the poster child of that incentive-based economy. When we start thinking about where do we locate some of the supply chain for the pharmaceutical or the PPE questions that we keep asking, part of the answer is in an incentive-based economy, opportunity zones look pretty good. So if we could have that as a tool, a flagship tool to attract businesses back to America, as a way to attract businesses in America to the most distressed communities in our country, I do believe that that combination would take the current contraction in our economy, and it would loosen it up some. We'd see more economic activity, and I believe that would lead to more progress. It would be a part of the combination, the pieces of the puzzle that moves this nation forward as quickly as it could be possible. So from my perspective, opportunity zones really is a major key to the future of this country, because it's founded upon the concept that incentives is the best way forward for economic recovery as well as economic opportunity.
Thank you.
Senator, I know you have a hard stop in 4 minutes. Just taking a question from the audience here. You talked a little bit about the legacy of opportunity zones. What do you predict for the future of opportunity zones in 2020 and beyond? And in terms of opportunity zones, what might it look like 10 years from now? Is there any legislation in the works over the next few weeks and few months? And what about QOZs, qualified opportunity, QOZBs, qualified opportunities on businesses? A lot of dollars have been flowing towards real estate. What are your thoughts on the business side of it?
Well, on the I think we're going to see a recalibration in the real estate world. I think Ben, I know you do taxes a lot, so perhaps you could talk a little bit about the impact that the coronavirus is going to have on the real estate development from an investment perspective. But I would say that without any question, real estate has been a primary objective from most investors. I think there is another wave coming. I think about a business in Maryland that's located in an opportunity zone that is working on how to provide more energy to cells to combat the issue of Alzheimer's and ALS, as well as I think it's dementia or Alzheimer's, one or the other. It's really a interesting business called Clean Technologies. It's phenomenal development. They're using the opportunity zone as a way to attract capital into their business so as to be able to launch some of the technologies that they believe and some of the research they believe will actually lead to scientific advances, medical advances in the area of the three challenges that we have in the areas of long-term mobility and some of the challenges that we have with memory. So that's one example, but we're having multiple examples around the country where people are looking at ways to invest their resources, not into real estate only, but the businesses that could be developed. I was speaking about 3 days ago with a developer in South Carolina, Columbia, who has just purchased some land in the last few months in an opportunity zone for the express purpose of attracting in light retail and then a mixed use development as well. So we're seeing a lot of different utilizations of the opportunity zone legislation from a business perspective. I'm hopeful that as I look throughout the country and talk to some of the governors, that we'll see even more interesting and innovative ways of using opportunity zones. Perhaps my last example comes out of New Hampshire and Iowa when I visited those two states on my National Opportunity Zone tours. What I found in those two states is that New Hampshire specifically, Iowa to some extent, West Des Moines, all hit pretty hard with opioid challenges. They were looking for ways to perhaps build better, healthier businesses that allows for their employees to have healthcare professionals come on site to provide them some assistance and manage some of the addictions that some of their employees had. And I thought it was interesting. One of the things that they're doing is extending or building a separate business system around people who are recovering. And they believe that because of the new margins of the tax deferrals, they'll have more liquidity to do more investing to build businesses and hopefully a prototype for other parts of our country to follow as it relates to the opioid crisis.
Thank you, Senator Scott. It's 12 o'clock. I know you have a hard stop. Are you departing now, or do you have another minute? I just want to be sensitive to your schedule.
They say I gotta go, but I'll take one more question.
One that just came in just a moment ago. If the current administration loses in the upcoming November election, do you see the Opportunity Zone program at risk? I know there's been a lot of bipartisan support, but love to hear your thoughts on that.
Yeah, there's no doubt that when there was a change in administration, I think you got to put all the cards on the table and assume that something bad could happen. Now, the definition of something bad could happen is all the things we're working on to expand and improve opportunity zones probably goes to the wayside, or they want to go back and retroactively look at some of the designations in some of the states and change those designations. That's kind of like pulling the carpet from underneath someone. That's something that is untenable. So from my perspective, it could lead to significant change. The good news is for it to have monumental change, that we would need to lose the Senate as well. I'm hopeful that we won't see that happen. So stay tuned. The outcome of this election will it will reverberate in many corridors, but most specifically to this conversation, the corridor of opportunity zones.
Senator Scott, thank you so much for your time today. I know your schedule is busy. You're being pulled in many directions. Keep fighting the good fight on our behalf, and we really appreciate it. We'll keep in touch with your staff.
Thank you very much. Have a great day.
Thank you.
Take care, Jay.
Take care.
For those that would like to remain on the call, the panelists will be available to take additional questions here. So I can field some questions from the panelists here. Let's see, I'll, in no particular order. Shay, you might be able to talk on this from a policy perspective. Do you think that there are any plans to increase the number of federal agencies participating and giving preference and priority points to grants for applications and opportunity zones?
Yes. So, one of the things that, that's yes is the short answer. One of the things that came out of, the process after Opportunity Zones was passed was Senator Scott led a letter along with, at the time, Majority Whip Thune to the White House to ask that they basically bend all of the resources of the federal government in terms of community development to favor opportunity zones. So if it's permitting, you go to the top of the stack if you're in an opportunity zone. If it's, if it's SBA loans, you go again top of the stack if you're operating in an opportunity zone. So what we've seen in conversations with the folks at the White House is that the pandemic has actually reignited that focus, which was already pretty extensive. I mean, if you could go to the White House website, and in terms of those resources that are available, there's 94 pages worth of actions that the federal government has taken to favor opportunity zones. And so we're going to see that list grow tremendously now with the pandemic, because we need even more of a boost on the other side of this thing.
And I know you helped pen the original legislation, so appreciate your insights there. Kunal, a question to you. What is your response or your thoughts to skeptics of the program that fear gentrification or spikes in rent or possible displacement for community members?
I think their concerns are valid. I think it's a complicated issue, and not all zones are created equal, but I think in certain zones it's absolutely a real issue. I mean, I think part of what the power of the legislation on the positive side is I think it's 870 some odd hundred zones around the country, which are urban, rural, and suburban areas that have persistent high poverty. A tiny fraction of those are really at risk for gentrification, but they also tend to be the safest bets, the most investment grade ready, and they get the most attention. And so in those communities where you already have pre-existing conditions where people are at high risk for gentrification displacement, this is just yet another risk factor. And the way that policymakers at the local, state, and maybe federal level handle those zones needs to be aware of that. That's not the case in a lot of suburban and rural areas. We do a lot of work in the Central Valley of California here, which looks a lot more like the Southeast of the United States than it does LA or San Francisco. They're not as concerned about gentrification and displacement. And so that's less of a risk there. And there's a different set of policy tools. So I understand why people are concerned about that. I go back to earlier, I think it was a mistake not to put reporting and transparency in the original legislation. I understand there were technical issues and all that, but between the IRS and the original legislation, or the Congress that was uniformly one party up until 2018, we could have done something. And in the absence of that, you have this distrust, and it manifests on issues like gentrification, displacement, which is real in some parts and not as much of a concern elsewhere.
Thank you, Kunal. Alex, a question from Alex Harper. There are numerous hospital networks within the opportunity zones across the country. Are there any specific program or incentives that you're aware of focused on investing into the medical arena?
Well, I think that goes to the structure of the program itself. It really isn't prescriptive in identifying specific projects or specific asset types. It really, the incentives are market-based. So it's a place-based incentive. If those hospitals or medical facilities are in a zone, then there is the potential to invest through a QOF structure. There is a bit of compliance and complexity around that, but there's nothing inherently that would prevent a hospital project or a medical project from earning QEZ status. We at RevOZ invested in a medical office building in Southern California it's a public-private partnership, pre-leased as we built it to the county of San Bernardino for juvenile medical health. It's the Juvenile Medical Health Center. So I think that's an example of how you can utilize this program in a public-private partnership structure that delivers financial returns and also positive community impact. So I think the beauty of the program is it's widespread and it's not prescriptive.
Thank you, Alex. Ben, can you comment on some of the tax regulations and some of the issues that stakeholders should be aware of from just a tax perspective, some of the mechanics?
Well, I think if you're not familiar with Senator Scott's letter, it was extremely well drafted and it covered a number of different areas, all of which related to providing some additional time for what sponsors or investors to be able to make their investment decisions and to move forward on projects. And so the first thing I'd say is to reach out to your respective legislators and ask them if they're asking questions around this, because it has a very big impact if you're going to delay the start of construction for some extended period of time. That's going to impact what goes on in the community. So the first thing is I'd just encourage everybody to use that letter as a platform to be able to ask questions and put pressure on Treasury and the IRS. I think the good news is we did get a lot of clarity in the last 18 months in terms of the regulations and the statute. There's still some things that are unknown, and they're creating some questions in the marketplace. I guess what I would say is the good news is our practice, if it's reflective of what's happening across the market, is that people are moving forward with their projects. These are typically development projects that are going to take a period of months to get off the ground, which is a good piece of information relative to the pandemic. And the optimism we have for going back to some sense of normalcy in terms of people showing up in the marketplace and in the workforce. So I think we have a solid set of regulations that we can rely on, and they're somewhat taxpayer favorable, which is all good for us.
Thank you, Ben. Shay, we had some inquiries. What were you running for? Congratulations. Give us a little background on what's in the pipeline for you.
Well, yeah. So obviously I didn't intend to discuss this, but Senator Scott brought it up because he's obviously helping me. So I'm originally from the Cleveland area in Ohio. And so I am running for the Ohio legislature, running for state rep in a district that involves that includes the east suburbs of Cleveland and the southeast suburbs. And so, my first real run for office, and I won the Republican primary on April 28th. And so now we'll just have the general election on November 3rd. So he was just congratulating me on that.
Thank you, Shay. Congratulations.
Kevin, don't worry. It's a part-time legislature, just a couple of days a week. So I'll still be able to fight for opportunity zones.
Well, thank you, because you're a great resource, as is everyone else on the call. And we'll make your if anybody wants to contact the panelists after the call, just reach out to me and I'll put you in touch. Alex, can you speak to what you look for in opportunity zone communities that you're currently investing in?
Sure. So our main thesis as opportunity zone investors is in real estate, in primary and secondary urban markets. We tend to invest nearby sports or entertainment districts where there's stuff happening and revitalization occurring. We invest nationally. Some of the markets that we invest in are investing in currently are, I mentioned the Charleston project, I mentioned Southern California. Obviously, Sacramento is kind of near and dear. We invested in a project in Indianapolis. We have a project in Denver that we're deep in diligence on. So we like markets that have strong millennial component to their demographics that are rising tides over a 10-year run. With respect to asset type, we are primarily multifamily / mixed use, or in some limited cases, office. We'll look at all asset types, so that's our primary focus. And then it comes down to the deal underwriting. So we have a deal team built out, led by my partners, Ryan Parkin and Tom Parnell, who come from deep institutional private equity backgrounds. and the deal team built out under them that do all the underwriting to make sure that the risk and return profile is appropriate, and that the sponsor, the real estate developer that we're partnering with, is reputable and has the track record to be able to accomplish the projects. So that's what we're focused on, and really excited about the foundation we've built and the opportunities for growth and scale in this category ahead of us.
Thank you, Alex. This question from Jeremy Pay to Ben. Ben, if you wouldn't mind, there have been some extensions to the clock that for investors and stakeholders. Could you give a brief update on the extensions available to investors? If an investor has capital gains from the 2019 Schedule K1, what is the last day they have to invest the funds into a QOF for Ben at CLA?
Sure. And we have a lot of different dates. That 180-day clock for an investor who's making a contribution of capital gain into an opportunity zone fund runs based on the specific facts of the investor. As it relates to COVID-19, we did get a little bit, and I say very little, extension to July 15th. If you were an individual investor and your clock was going to run during the period of April, I think the date was the first part of April, you got an extension until July 15th. The latest date for an individual whose gain is coming from a pass-through entity like an S corporation or a partnership is actually September 11th of 2020. So that we got no extension on that date. That date is still a hard and fast due date for an investor who's investing in an opportunity zone fund. And then the larger concern is the fund itself and the timeline it has to be able to meet its testing criteria with respect to its investment in its operating zone business property or entities. And we didn't get any absolute extension there. We did get a 24-month potential extension, but it's couched in the terms of being facts and circumstance based. So it was not a safe harbor. In other words, the way the language is written is it wasn't a blanket safe harbor that blanket applies to you regardless. So you're going to want to talk to your advisors very carefully about how that 24-month extension might apply to your fact pattern.
Thank you, Ben. To Kunal. Kunal, is there any update with California and conforming with QOZs? Anything you can share there? And also, let's see, what are the pros, cons, arguments you hear being debated nationally and California related to post-COVID with QOZs?
Sure. So I think two parts. So the one in terms of California is, I think probably most folks on the call know, California is one of the handful of states that did not adopt state level tax conformity to the federal level. They're one of 4 states. The short version is I'm not optimistic about that changing. We had been pushing some targeted conformity at the beginning of the legislative session when the California state budget had a $6 billion surplus. That was before COVID. After COVID, they're now running an estimated $54 billion deficit. And so the appetite for the Department of Finance to forego any kind of revenue is low. So that it's unfortunate. So what we're doing is we're switching gears and trying to think of non-budgetary ways to create value for investors at the state and local level. We submitted a letter along those lines. There's a lot of things we could do to maybe speed up project times or reduce some of the regulatory complexity or create incentives at the local level that we're focused on. In terms of the second question, what do opportunity zones look like after COVID? I think it's up to this group. It's up to everybody on the call and the entire ecosystem more broadly. This is a tool that can be used for to do good, or it can be used to do less than good. And I think we know that the communities that were designated as opportunity zones were struggling before COVID, which is why this program exists in the first place. And we know that the impacts of COVID are disproportionately affecting people on the lower rungs of the economic ladder. And so it absolutely is a tool. I completely agree with Shay and Senator Scott and everybody else on this call that opportunity zones should be a part of the solution. I think there's ways in particular around business where opportunity zones is a much more agile tool than some of the other ones we have available. We're going to have a lot of small businesses that go under, but as the economy heats back up, or at least uncools, we're going to need businesses, and there's ways to seed new businesses as qualified opportunity zone businesses to meet those needs. I think that would be really exciting to see happen. Obviously, there's a huge real estate component in a lot of what Alex talked about. So I would just ask everybody who's an investor to really see how you can shift your portfolio even more than you wanted to before towards investing capital in these neighborhoods, because they're going to be highly undercapitalized and they're going to have a lot of needs. And I think there's any number of ways to be helpful post-COVID. And that's the beauty of this tool. It has the flexibility to do that.
Thank you. That question was from David Helfrich in Northern California. To Shay, actually. Shay, as a result of the pandemic and protests, do you anticipate there being an increase or decrease in the number of opportunity zones, possible expansion? In general, are governors in favor of adding OZ incentives in more poor and rural communities?
Yes. So, the expansion of the actual number of zones is something that was a goal of our organization pre-pandemic, right? So the idea would be to allow governors to designate, an additional, let's say 10% of the distressed census tracts in their states or territories as opportunity zones. In Ohio, that would result in, another 120 zones. And this would do a couple things. One, it would, expand the possible footprint in terms of, impact on distressed communities. But also, there was a feeling amongst many governors, many local governments, of being kind of quote unquote left out. So there are areas that, in retrospect, folks thought should be included that weren't, and so that would that would solve that problem. Another potential option would be to allow governors to redesignate zones. So if there's places that don't want an opportunity zone that have it, or if there's places where it's just not going to be utilized, then governors could redesignate. So that was a goal pre-pandemic, and our conversations, at least with the governments that we talked to so far, and those economic development departments, is that an expansion would be good. In terms of state incentives, I think there's a great appetite, as Kunal mentioned, for incentives that don't require an outlay, right? So if there's things that they can do on the regulatory and permitting side to speed up the process, we've seen a lot of appetite for that. We have not seen appetite for things that cost likely revenue, or that that require an outlay from state governments.
Thank you, Shay. Appreciate it. To Alex, back to the topic of COVID-19. Alex, can you comment how the underwriting team at RevOZ Capital is evaluating or reevaluating deals in the pipeline, given the sort of pandemic situation and everything else going on?
Sure. Thanks, Kevin. Well, I think just taking a step back, irrespective of the underwriting and the deal making that's taking place to invest at appropriate values, given to the post-COVID environment, I think if you take a step back and look at the real estate world from a cyclical perspective, it's much better to invest at the closer to the bottom of the market than it is at the tippy top of the market. So I think what we're seeing in real estate in general, because of the situation that the country is in, is everything's on sale to some degree. And if you are a long-term investor, which by nature opportunity zone investors have to keep capital at work for 10 years or more, that's part of the structure of the program, then investing kind of post-crisis, when things are not necessarily distressed, although there could be some of that, when things are essentially on sale and value and entry points and values are more reasonable than they were just a few months ago, we think that kind of broad thesis, it makes 2020 for a good year for investors to invest in real estate projects.
Thank you, Alex. Also to the panel, let's see. Well, Alex, on that note, is there a specific asset class that you're focusing on or avoiding right now? I mean, things have been shaken up quite a bit in the last few months, but what asset class are you focusing on? Multifamily, retail, industrial, office?
So at RevOZ, we're real estate investors. So that's what we do. With respect to asset type, we were more open to hospitality, but given the crisis, we kind of tapped the brakes on a couple deals in that asset class. We haven't invested in anything in that space through our current fund vehicle, nor in pure play retail. I think it's probably just a little too early for us to do that. We'll keep an open mind and see how things transpire from here. Obviously, if you're a value investor, then there's a lot of great values in that side, but the business plan is a lot more risky for both of those categories post-COVID. So we're sticking to more tried and true multifamily and some limited cases office projects. Industrial could be an interesting area too for us. That's kind of rising in importance, especially with the transition from brick and mortar to an accelerated e-commerce environment that we're in.
Alex, I know we're pushing up against our stop here in a couple minutes. I think it'd be great to go around the panelists and just give final thoughts of 30 seconds to a minute, final thoughts for the people on the Zoom call today. And again, I will make everyone's information available if someone wants to contact or further discuss with any of the panelists. Please reach me directly at RevOZcapital.com. But then give us some final remarks from the accounting technical perspective.
Opportunity zones are a green light. Clients are looking at their respective asset classes and they're asking the questions that you would think they should be asking. And they're, going slower, just as Alex described, right? Hospitality is not a segment that has the same allure and interest that it did 6 months ago. The regulations, although final and guidance coming out from Treasury favorable, it's still a fairly complex space. You want to make sure that you have a great team of advisors, both on the legal and the tax side, in terms of pursuing these opportunities.
Thank you, Ben. Kunal, final thoughts, wisdom, insights for the participants?
First of all, just appreciate everybody's time, and especially given everything else we have going on right now. It means a lot to us that amidst all the world issues, you spent the last hour with us. If I have a simple message, it's just this is a time for action. I think a lot of us who have been working on opportunity zones for 2 years, there's been a lot of talking and thinking and planning and waiting for clarity, and I get how COVID has now added an additional layer of uncertainty for funds, for fund managers, for project proponents, but we just got to go. I think we're at this very tenuous moment where we can either lean in, take a little bit of risk, and that goes for policymakers, it goes for communities, it goes for investors, and try to really stabilize this and build out the kind of new tools for economic development, or we can continue to be very cautious and look at our very narrow self-interests or what's safe, and then collectively slip into something that we may not be able to manage further. So I don't want to be a doomsday person, but I really think we need to show some guts and some action. And so everything we're going to do at CalZ now, we're kind of out of the advocacy game for the moment. We're just trying to get deals done. We're trying to get projects going. We want to get people hired. We want money. We want boards being nailed into the walls and stuff going up. Like, let's just go. So that's my message to everybody.
Thank you, Kunal. Shay, how about some final words from you from the OZ perspective?
Sure. I just want to emphasize, the subject matter of this webinar, that OZs are going to be more important than ever on the other side of this pandemic. For the most part, there's nothing, we had a great economy, coming into this situation, and everybody's going to be eager, to get America's foot back on the ladder and get us climbing again. And so opportunity zones are going to be a critical part of that. And so obviously, for those of us on this call, that really means, as Kunal mentioned, really, putting brick on brick and making sure that we do everything to support developers and entrepreneurs as they pursue these projects. But beyond that, we have to encourage those on Capitol Hill. With every tool available to us, every time we're on a panel, every time we're out talking, every time we're, talking to our investors, we have to encourage the folks who are doing the right thing. Senator Scott, helping and working with us to put that letter together was really critical in providing relief. But they need, they need very aggressive support to send a signal to him and the folks he has working with him in a bipartisan way to get this stuff, moved along. Beyond that, I would just, I would caution folks, because of the pandemic, because of the, the nature of the economy, we've seen a lot of legislation regarding opportunity zones kind of come out, particularly on the House side. And so, some of the legislation can look exciting, some of it can look very negative depending on, depending on who's introducing the legislation. And here's the thing to know. Most 99% of opportunity zone legislation that you see is basically messaging. Is to send a signal. If it comes from certain folks, it's to send a signal that, that they're against the wealthy. If it's coming from other folks, it's to send a signal that they're pro-business. But in any case, we shouldn't really take it seriously unless the legislation is sponsored by someone who's on a tax writing committee, right? So when you see something that doesn't have a tax writer on it, a member who's not on Ways and Means or on the Senate side of the Finance Committee, it's not serious and shouldn't be taken seriously. And so that's important for the good and the bad, and so that's critical. There's key people who are going to be advancing real legislation. One of them was on a call with us today, and the other ones are on, whether Democrats or Republicans, are on the actual committees that have jurisdiction over this policy. So that's what I would offer in terms of insight.
Thank you, Shay, and congratulations on everything you're doing, and I really appreciate your efforts. You're one of the reasons we're here having this conversation. So really appreciate that. Alex,
Working hard.
Final insights.
Sure, I'll wrap it up quickly. I was just on a phone call prior to this, and with a big family office, and they were so distraught with what's happening in our country today, and the unrest and the economic devastation through the quarantine, and they said to me that, you know what, we can get returns a lot of different ways. We're focused on investing only in things that matter. And as a family office, having the family office background, I can say this matters. If you're a long-term investor, if you care about our country, there's not an asset class or an investment niche that's more important than investing in opportunity zones today.
Thank you, Alex. Yep, community impact is huge. So thank you. We're going to wrap up the call. It's 12:30. Appreciate everyone's time. Again, thank you to our panel of experts in policy, real estate investment, tax, and structuring. And everybody's available by email. If anybody wants to contact me, I'll put you in touch with the speakers. Thank you so much. Be safe and stay healthy.
Thank you, everybody.
Thank you, everybody.
Thanks, guys. Thanks, Ben. Thanks, Kunal. Thanks, Kevin. Thanks, Alex.
Thank you.
Good job, fellas.
Have a good day.